In today's video, I'm going to show you the exact concept that took me from years of failure to finally becoming profitable. I've tested this for years, and once I truly understood it, everything changed. And it's one of the most powerful things that I used in trading, and in this video I will break it down step by step, so make sure to stick till the end so you can start applying it right away. So let's get into it. Before I get into what the strategy actually is, I want to show you my profits using, of course, this model, because I don't want to teach you something that I don't personally trade. So you can see right here all of the trades, all of the weeks, and my profits, and of course my losses. And you can see right here this is a profit over just under 6 months, so I made over 6 figures, and you can see how steady the equity curve is to the upside. So the strategy is really consistent. So now let's get into it. So the first step of the strategy is going to be to mark out highs and lows on the higher time frame. So I'm going to show you exactly how to do that, and later on I'm going to explain you why exactly do we do it. Second one is going to be to wait for the manipulation of one side. So one side, so either high or either low in the market, has to get manipulated in order for us to start searching for an entry model. And of course the next step is going to be to execute the trade and manage position, of course, where to put a stop loss and where to put a take profit. So that's the whole strategy, and that is the best part, that it is so simple that it's only 3 simple steps, so anybody can execute this model. So the first step when we come into the market, of course, as I told you, we are going to mark out highs and lows. So for example, sometimes market can be trending, sometimes market can be ranging, but of course it is every time going to be the same thing. We are going to mark out high and low, and that is going to look like this. So you can see how obviously this high right here is the biggest high, and how this low right here is the biggest low out of all of these highs and lows. So all we do for the first step is we just need to mark them out. Then the second step is going to be to wait for the either high or either low to get manipulated like this. So we are going to wait for market to either sweep to the upside or sweep towards the downside, and that is it. And now the point with this model is that a lot of people are going to think, all right, market is breaking out to the upside. What I need to do is I need to either enter on a retest towards the upside, or they're going to enter off of the breakout. And that is complete wrong way of thinking, because market is always moving in an unpredictable pattern where the market is just sweeping highs and lows. But a point with this strategy is that we are going to wait for the first sweep, which is then going to lead us to know which one is second. So after we get the sweep of one side of either upside or the downside, we are gonna know what to look for next. But these traders right here, they are gonna lose their money. So that right there is why most of the traders get it wrong in the market, and that is why they lose in the market, because they do not understand the simple principle of market manipulation. So after we get the sweep of the one side, for example, in this example it is the high, we are going to wait for the last fair value gap. So fair value gap is an imbalance in the market, and you can see from this week right here to this week right here, we have some kind of a hole in the market. And what the market usually does, it likes to retest them and then continue moving on to the upside. So that's what all of them are going to think. But we are going to wait for a pattern where that fair value gap gets disrespected, because that is going to be a sign for us, all right, market does not want to go to the upside, because it will just bounce back up from this fair value gap. But the market clearly told us that, all right, we are not going to respect this fair value gap right here. We are going to close below with a body, and what are we going to do? We are going to target, of course, to the downside, to this resting liquidity levels right here. So simplified, it is going to look like this. So you can see we have a fair value gap, so from week's high to the third week's low, so we need total of 3 candles. And after that, after we get a sweep, of course all we are looking for is the disrespect of the fair value gap towards the downside. For example, if manipulation happened right here towards the upside, we just want to see a disrespect towards the downside, which is going to lead us to then target downside liquidity or downside lows. And that is the whole strategy. All is going to look is like this. So we are going to have a high that will actually get manipulated like this. After that, we are going to wait for the disrespect of the fair value gap, which is a clear sign that markets wants to start reversing. We are going to enter on the closure. We are going to put the stop loss above the body that closed, and all we are going to do is we are going to target towards the downside. We are going to target all of these lows right here. And of course, strategy has above 80% win rate, which just gives us a huge edge over the market. So it's going to be really consistent. But right now, let's go into some real life example. All right, so let's see what the market is doing right now and what the steps are and what we are going to do in order to execute a position. So the first thing, if we look at a chart, we need to mark high and low in the market. So for example, if you look at this last structure, we can see that we have a clear high right here that we cannot really miss, and then we have a clear low down here. So we have this low right here, and also we can look to the left, we do not have any more highs, but here we actually do have one more low that is also just going to be a confluence if we sweep or if we need to target. So all we do for the second step is we wait for the one side to get manipulated. So if I fast forward the market, we can see that it ended up being the upside. So since we swept the upside, all we are going to do is we are going to start targeting towards the downside and towards this low, because all the people are going to think that market is going to expand to the upside now and it's going to break out to the upside. But all we are going to do is wait for the disrespect of the fair value gap. So we can see that we have few fair value gaps right here that are really near each other. So if we manage to close below this one right here and we manage to tap into this one, I also want to see this one down here get disrespected. So let's see what the market is going to do if I fast forward it. So right now we didn't close, and there it is. So this is the closure that we have been waiting for. So all we do, as I told you, is we enter the position. So right here we are going to execute a short position. Our stop loss is going to be above the body or above the candle, and what we are going to do is we are going to target towards the downside. So we can either target this low or this low down here, it doesn't really matter. And you can see that our total risk to reward is going to be 2.9 risk to reward, so almost 3 risk to reward. So let's see how the trade is going to play out, and you can see it right there, beautifully played out towards the take profit. So honestly, this is a really simple strategy, and that, for example, with this trade you could have made $3,000 with, of course, just a simple $100,000 funded account, and of course with a normal risk. Okay, so let's right now check out one more example. So the first thing, as always, is we mark out high in the market and then we mark out low in the market. So really simple. We have our highs and lows marked out. All we need to wait is, of course, for one side to get swept. So let's see which side is it going to be. So it's the downside. So right now we swept the downside, which means we want to target to the upside. But right now I'm going to show you a few key things with the time frame. So for example, the last trade was executed only on the 1 minute time frame, but I'm going to show you the trick to even get a bigger risk to reward. So for example, if we open the 1 minute time frame, you can see that right here we have a fair value gap, and then right here we have another fair value gap. Then if we scale up to the 2 minute time frame right here, we can check out if maybe there is a cleaner fair value gap, and there actually is. So you can see that right here we have a really clean 2 minute big fair value gap. And then also what we can do is we can scale out to 3 minute time frame. So let's see, and there it is. So on the 3 minute time frame we do have a bigger fair value gap. So what do we do right now is we wait for the biggest time frame fair value gap to get inverse. So let's see if this is going to be the fair value gap or not. So looks like the closure is going to be null. So it is in fact a fair value gap. So we have a one more fair value gap on the 3 minute time frame. So all we are doing is waiting for the inversion. So for example, this fair value gap right here, you can see that before it got disrespected, we tapped into this fair value gap and this fair value gap. So the rule is that the fair value gap that got tapped into needs to be disrespected before the entry. So for us to enter, it has to be up here after we disrespect this final fair value gap. So let's see if that is actually going to be the case. So if I fast forward the market even more, so you can see that we spiked to the upside like crazy. And let's see what happened in the end. We ended up actually disrespecting the fair value gap. So what we do is we enter the position and we put our stop loss below the body or below the candle or below the fair value gap that we inverse. So it's completely up to you whether you want to put it here, here or here, but it's all completely right. And of course, what this position is lacking a little bit is that we have a huge wick to the upside, but still we ended up disrespecting the fair value gap. So what we can target is either to the upside to the final take profit, or we can target some liquidity below, which is this one, but this is completely fine to target this final high. And let's see what will happen. So for right now we are in slight profits, and in the end we ended up smashing through the take profit and going to the upside. So another 2.2 risk to reward, which means in these two trades that I showed you, it's more than $5,000 with a simple $100,000 funded account. And not to even mention that you can have a lot of those accounts, and of course you can copy trade them and make huge income with just a simple funded account. So if you like the video, make sure to leave a like, subscribe, and also comment some questions if you have. But before you leave the video, if you do want to claim my free playbook of this strategy, make sure to go down there in the description and claim it for completely free. Also, one more thing is, if you want to maybe get mentored by me one-on-one, there is a link down there where you can book a call, and there we will check out if you are a right fit for the mentorship. So if that's maybe something that you would want, make sure to do it fast so the spots don't get taken. So with all of that being said, I'm gonna see you in the next video. Peace.